All right. Good morning, everybody. Good morning, everybody, and happy Tuesday. Today's January 14th, 2025. We're almost halfway through January already. And the top story this morning is inflation. It was a beat low. Now, we're not talking about the important one. That's CPI. CPI is tomorrow. That's the one everybody's really worried about. That's the one you pay. This morning, we are talking about PPI, the producer price inflation. We're measuring inflation further upstream. That's important because what the producer pays tends to be passed on to you. So if we see drops in PPI, that could mean the consumer is going to catch a break pretty soon. So what did we get? We got PPI that was, by all accounts, lower than expected. Both headline and core, month over month and year over year numbers came in below expectations. And there was actually one number in particular that looked really, really good. So let's do the quick math here. Headline number, 3.3% for the month of December. That is below expectations of 3.4%. So it's a beat low, but it's also up from 3.0% last month. So that's probably the worst looking statistic there, that headline number at 3.3%. If you stop reading right there, which a lot of people do, then it looks like inflation is still getting worse. But as you read on, the numbers start to improve. On a month over month basis, that headline number came in at just 0.2% month over month. That's versus expectations of 0.3, again, a beat low, and that's down considerably from 0.4% last month. Now, core inflation looks really good here. Core inflation, which strips out volatile food and energy, again, this is PPI, came in at 3.5% year over year. That's well below the 3.8 that was expected last month, or that was expected for this month, and it's flat from last month's reading. All right, so core inflation year over year was expected to get a lot worse, and it didn't. It stayed flat. Now, on a month over month basis, the core number looks great. 0.0% month over month. That's versus a 0.3% increase and down from 0.2%. So that month over month core number looked fantastic. Zero, no inflation whatsoever. So the market rallied a little bit on this news. We had a nice little step change up. You'll see that in a second when we go look at the indexes. But it's a muted reaction because right now a lot of people have their eyes on oil. We've seen oil prices move between $5 and $10 higher over the last 2 months or so, and people are worried that's going to start translating into these inflation numbers. I agree with that sentiment, especially if we stay in the mid-80s for much longer. Core inflation remains higher than the headline numbers, so energy has been a big drag to the negative on inflation prints for really the last year or so. How much longer is that going to last? It's been really freaking cold pretty much all over the northern hemisphere. Colder than usual. Natural gas prices are up sharply. Europe is a mess when it comes to energy. So sooner or later, these higher energy prices are going to start translating into higher inflation prints. So I think the market would be seeing a bigger relief rally on this news if it wasn't for that thing looming on the horizon, those higher energy prices. Also affecting the inflation story this morning, there's some talk about tariffs. There's one of those people familiar with the matter stories in Bloomberg and CNBC this morning talking about how Trump's team is considering a gradual rollout of tariffs instead of just day one, 25%, wham, good luck to you. This story, again, anonymously sourced, is saying that they're exploring the possibility of doing something like 2% to 5% a month for several months so as to minimize that inflationary shock right on day one of the Trump presidency. Again, this is anonymously sourced. I think what's probably going on is the Trump transition team is kind of leaking these stories to the press in order to gauge market reactions to them and see what works, what people respond positively to. So that story, that would be, tariffs are inflationary, but the gradual rollout of tariffs, in 2 to 5% increments would be less inflationary than most people's base cases. So I would say that story kind of reduces the inflation narrative a little bit. Of course, then there was this tweet about the premier of Alberta leaving a meeting with Mar-a-Lago, and apparently that meeting did not go well because she's out there saying, everybody get ready for 25% tariffs on January 19th or on January 20th, including oil from Canada. So hard to gauge what's really going on there with the tariff plan. I guess we're not going to know until the guy takes office. Also going on this morning, there was a rumors broke last night that TikTok was considering selling to Elon Musk. Wow, who had that on their 2020s bingo? Elon buying TikTok. Now, again, this is that guy familiar with the matter. I swear, this guy's everywhere. Anonymously sourced. TikTok is denying it. But look, TikTok, right now, the Supreme Court is deciding whether or not to strike down that law that requires ByteDance to divest TikTok. That law goes into effect on January 19th. And at that point, any internet service providers enabling TikTok would be fined. So something better give here. Is ByteDance going to sell, or are they going to keep fighting it in court? I don't know, but I'm sure some people out there, some snowflakes, are probably having meltdowns at the prospects of Elon Musk buying TikTok as well. Are they going to rename it X-Talk? Are we going to have to do it? Anyways, I'm not on TikTok. I have a lot of people ask me that all the time. Jack, how come you're not on TikTok? I don't like the idea of the CCP backdoor in my whole life on my cell phone, and so I'm not on it. Maybe I will go on TikTok if Elon buys it. I don't know. I mean, I'm not like an Elon fanboy, but I'll take Elon over the CCP any freaking day. Let me know in the comments. If Elon buys TikTok, should I go on TikTok? I don't know. Also this morning, we got the National Federation of Independent Businesses, the NFIB Small Business Optimism Index, 105.1. That is a blowout. That is the highest reading since October of 2018. And that is 2 consecutive months now of a huge jump in optimism about small businesses. Guys, the jury is out, or the verdict is in, I should say. It's pretty clear here. Small business loves Donald Trump. Whether they're right to or not, you guys can bicker about that in the comments all day if you want to. We'll see if that sentiment survives the tariffs and the first few months of the presidency. But there's no mistaking it. Big jump starting in November, continued into December. Small businesses are more optimistic than they've been since the last time Donald Trump was president. Also, speaking of president, we had President Biden is out this morning with an executive order on AI data centers, ordering the Department of Energy to lease federal lands to data center builders, and as well as some incentives for clean energy to power the data centers. So a couple more executive orders on the way out for Sleepy Joe. And last but not least, there's a story in Bloomberg about NATO is deploying naval drones in the Baltic Sea. This is in response to several instances now of tankers in the Russian shadow fleet, as well as some Chinese ships that were just dragging their anchors around the Baltic Sea. Something similar happened in the South China Sea around Taiwan a few weeks ago. They're dragging their anchors for hundreds of miles, breaking undersea cables and pipelines and all kinds of stuff. And, well, I guess maybe it was a bad idea to blow up the Nord Stream pipelines. Just maybe that was an ugly precedent that, civilian infrastructure is now fair game in this tiptoeing around, are we at war, aren't we kind of thing. And I still, to this day, I swear to God, it was us that blew up the Nord Stream pipeline. We're the only ones that benefited from it. And anyways, that was an ugly precedent to set, because now undersea internet and phone cables, along with other pipelines, are fair game, and they're being destroyed. And so NATO is deploying drones to patrol the Baltic Sea. And what are they going to do? Let's say, okay, there is a ship dragging anchor in the Baltic Sea. Are they going to sink it? Well, that's the kind of stuff that can start wars, isn't it? So what is the actual plan here? I don't think they actually have one. I think they're just figuring it out as they go. Anyways, we got a lot to talk about this morning. Why don't we shrink my big melon of a head and let's see what's going on in this markets. And this is when I typically hold up my mug and say, don't forget that like button and that subscribe button, because we do this every day. So come on back tomorrow and have your coffee with the melon heads. Right now, the S&P 500 is up 20 points ahead of the opening bell. You can see a big green shoot here. That was that PPI reading coming in below expectations. The market took a nice jump on that news, but we are now giving that back. We've given back more than half of it here, but still 20 points higher, 0.33% to the upside. You're going to see something similar in the Dow here, up 119 points. Also a big reaction to that PPI, and we have now given back half of that, but still a pretty good morning for the Dow. And the NASDAQ is up 80 points, 0.38%, also in the process of giving back all of its gains off of that lower than expected PPI. Markets typically don't follow PPI that closely. I think the reason why, we're just in a weird calendar month where PPI comes out a day before CPI this month. It happens every now and then. It's pretty rare. I don't know what scheduling quirk made it fall like this month around, but I think people are probably taking this lower than expected PPI reading, and they're kind of translating that into, well, maybe CPI will be lower than expected tomorrow, and that's why a little bit of that optimism this morning. Typically, the market doesn't really move on PPI, though. The DXY, meanwhile, at 109.68. That's modestly higher here by about 7 basis points, a little bit lower than we were this time yesterday. This time yesterday, we were pushing 110. We did come back from that. Still stronger dollar this morning. And then looking over at the bond market, we've got the 30-year treasuries at 4.984. That's down a fraction of 1 point. The 10-year also down a little bit here, 4.788. That's down almost 2 points. The 2-year treasury, 4.382. That's down 2 points as well. And the 1 month is at 4.315. Essentially unchanged, up a fraction of a point here. Looking over at the commodities board, we've got a little bit of red, a little bit of green, mostly red, though. Let's see. Spot gold at $2,660. That's down about $2, essentially unchanged for gold. Spot silver, meanwhile, is at $29.66. That's up about 3 cents or 0.1% higher. So not a lot of move in precious metals this morning. Copper, meanwhile, is 0.2% lower. Platinum is 2.0% higher. Lower. I'm sorry, not higher. Platinum is down 2%. Palladium is higher by 0.25%. And West Texas Intermediate crude for March futures at 76.67. That's down about 64 cents or 0.83%. And while we're at it, let's talk about natural gas here. February natural gas futures 377. That's down about 15 cents here or about 3.9% lower. Natural gas has been on a tear lately, but beware the Widowmaker trade. A lot of guys have been wiped out trying to trade natural gas. Also, let's talk about Bitcoin this morning. Some interesting things in the Bitcoin chart here. This is as priced on Coinbase, $96,241 here. These are daily candles we're looking at. I want to point your attention to two things here in these two candles there. First of all, look at yesterday's candle. Big sell-off. We went below 90,000 very briefly yesterday, $89,028. And then a nice bounce off of that level, essentially closed the day. Well, Bitcoin doesn't really close, but the day resets on the calendar, essentially unchanged, down a little bit, but pretty much right where it started the day. Now, we're up this morning a couple $1,000, back in the mid-90s here. But if you zoom in here, you'll notice where it stopped. Bitcoin stopped right at the 50-day moving average this morning on that rally and then gave up a little bit of those losses. That blue line there, that's your 50-day moving average. So that's a little bit of technical resistance there. And the 50-day moving average is currently, what is that level? Right around 97,400, and we'll say 97,480. Watch that level today. If that continues to act as resistance, that could mean we are heading lower. Also, an interesting story here. Don't worry so much about the numbers in this story, but this is pretty interesting in ccn.com, not a website I frequent. But Italy's largest bank, Intesa Sanpaolo, did I say that right? I don't know. Intesa Sanpaolo is reportedly bullish on Bitcoin and buys $1 million worth. Okay, $1 million. Not a lot of Bitcoin, not even a needle mover here. That is not the story. The story is that Italy's largest bank is buying Bitcoin. And this is the first time they've ever done that. Intesa Sanpaolo, Italy's largest bank by market cap, has made a surprising entry into the crypto world. The historic move marks the first time an Italian bank has purchased Bitcoin, signaling a potential shift in the regulatory environment for cryptocurrencies in Italy. Let's see, on January 13th, so yesterday, a leaked internal email from somebody I can't pronounce, the head of digital asset trading and investments, revealed that the bank had executed its inaugural Bitcoin trade, purchasing 11 Bitcoin for $1 million. Again, a token amount here, trifle sum. Intesa Sanpaolo made the purchase at around 11 a.m. Central European time when Bitcoin was trading at approximately 92,800. Hoping this is just the beginning, the guy wrote, signaling potential future investments. Again, don't get so hung up on the numbers, but the largest bank in Italy, a big European bank, is now buying Bitcoin. That is the story there. Continued institutional adoption. If this turns out to be the first of many, then this could result in significant flows into Bitcoin. So I figured that was worth mentioning here. Again, $1 million, not going to move the needle. Now let's talk about these PPI numbers. This is a chart of the year-over-year change in headline PPI. So if you just look at this chart here, showing PPI coming in at 3.3% year over year for the month of December. This looks like inflation is trending in the wrong direction, right? We've been moving up pretty much all year. We had a dip in the summer, and now we're heading higher 3 consecutive months. All right, but that is pretty much the only reading there, the headline year-over-year number at 3.3. That's the only one that's really worrying here. All these subsequent numbers actually look pretty good. Take the headline PPI number at month-over-month here, 0.2%, below the 0.3% the market was expecting, and down from 0.4% back in November. Now, this chart, if you go back, it kind of shows, number one, volatility. PPI tends to bounce up and down, but overall, a slight downtrend going back since the start of 2024. Now, if we look at the the year-over-year core PPI, this one doesn't look quite as good, okay? Again, you're looking at an overall uptrend here, but an uptrend that just showed signs of topping. Core PPI came in at 3.5% year over year. The market was expecting 3.8, so this was a miss low, or I should say a beat low. And the fact that it was flat versus November, perhaps a sign here that core PPI is topping. And we better hope core PPI is topping again, because energy is showing signs of increasing prices in both natural gas and oil. Other things like diesel and fuel oil have gotten considerably more expensive in the most recent months. So we need core PPI to start coming down, because the headline number is going to start moving up as the energy index begins to turn positive. But by far the best number here was this month-over-month core PPI number coming in at 0.0. Now, there's a couple of different versions of this article out there. Some people are saying 0.1%. Some are saying 0.0. So I'm guessing it was in positive territory, but a decimal point. Some are rounding up, some are rounding down. But it was essentially unchanged, all right? And that's down from 0.2% in November, and it's also below the 0.3% that the market was expecting. So pretty much any way you look at this, guys, PPI was a beat to the downside, we'll say a bullish inflation print. This was good for stocks. The market initially reacted very positive to it and then kind of gave back most of those gains. Now, let's talk about this tariff threat, because this is something that could juice inflation again. This one in Bloomberg, Trump team studies gradual tariff hikes under emergency powers. The plan would boost import duties 2 to 5% a month on trade partners. Members of President-elect Donald Trump's incoming economic team are discussing slowly ramping up tariffs month by month, a gradual approach aimed at boosting negotiating leverage while helping avoid a spike in inflation, according to people familiar with the matter. There's those anonymously sourced articles again. One idea involves a schedule of graduated tariffs increasing by about 2 to 5% a month and would rely on executive authorities under the International Emergency Economic Powers Act, the people said. The proposal is in its early stages and has not yet been presented to Trump, the people said, a sign that a monthly stepped approach is early in the deliberation process. Advisors working on the plan include Scott Bessent, the nominee for Treasury Secretary, Kevin Hassett, set to be the director of the National Economic Council, and Stephen Moran, nominated to lead the Council of Economic Advisors, said the people, who of course requested anonymity to discuss internal deliberations. What's my take on this, guys? I think this is being leaked to the press just to see how people respond to it, gauge market reaction. I think they've been doing this a lot lately. You're probably going to see a lot of this over the next 5 or 6 days until they actually take office and start holding press conferences again. But this would certainly be less of a shock than an instant 25% across the board tariff. And we got this tweet from Javier Blas. Javier Blas is like the commodities guy over at Bloomberg, and I follow him on X. He's a pretty good Twitter account to be following, especially if you're big into oil markets. And this morning, Javier tweeted this out pertaining to the oil market. After meeting President Trump at Mar-a-Lago, Alberta Premier Danielle Smith says Canada should prepare for 25% tariffs starting on January 20th on all U.S.-bound products, including on crude oil. I'm not expecting any exemptions, she told reporters. So, man, to be a fly on the wall in that meeting, it seems that meeting went really well. She walks out of there throwing a tantrum, talking to the press, saying, get ready for 25% on everything. So apparently this 2 to 5% monthly graduated approach appears to be at least just a concept right now and not mainstream within the Trump transition team, because according to this lady who just met with President Trump, it's going to be full speed ahead on tariffs on day one. Tariffs on Canadian crude is not something I had given a lot of thought to, something that could potentially drive oil prices higher. I don't know if that would drive oil prices higher so much as just incentivize domestic production. I guess they're one and the same, but that's something that I hadn't given a lot of thought to. Also going on this morning, China considers selling TikTok U.S. operations to Musk, according to Bloomberg. Now, again, this is another one of those anonymously sourced articles, and there's all kinds of denials floating out there, but people are talking about this morning. The Chinese government is considering a plan that would have Elon Musk acquire TikTok's U.S. operations to keep the app from being effectively banned, Bloomberg News reported on Monday. The contingency plan is one of several options China is exploring as the U.S. Supreme Court determines whether to uphold a law that calls for China-based ByteDance to divest TikTok's U.S. business by January 19th, the report said, citing anonymous sources, of course. Nobody ever names their sources anymore. After the deadline, third-party internet service providers would be penalized for supporting TikTok's operations in the country. Under the plan, Musk would oversee both X, which he currently owns, and TikTok's U.S. business, Bloomberg said. However, Chinese government officials haven't yet decided on whether it would proceed, the report said, noting the plan is still preliminary. And this is pretty important here. A TikTok spokesperson said in an email to CNBC, "We can't be expected to comment on pure fiction." X didn't immediately respond to a request for comment. So TikTok is pretty adamantly denying this story here. Elon has been strangely silent on this. If this story was fake news, I think Elon probably would have been pretty quick to point out that this is BS, and he hasn't done that, at least not to my knowledge. That being said, we got a few days here, guys. 5 more days, this 2019 law, or this January 19th ban goes into effect, assuming the Supreme Court doesn't strike it down. So what happens to TikTok? Only time will tell. Now, check this thing out. Look at this chart here, guys. This is the NFIB Small Business Optimism Index. All right. And now this is a chart that tells me small business loves Donald Trump. That's what this tells me. I mean, here we are. We've been going around. We spent most of 2024 in the 80s and 90s. We moved toward the mid 90s around October. And then November happens. And all of a sudden, we're over 100 at 101.7. And then December, 105.1. What the heck happened in November that all of a sudden small businesses are so optimistic? Well, it's pretty clear what happened in November here. Let's read a little bit of this text. The NFIB Small Business Optimism Index in the U.S. soared to 105.1 in December 2024, the highest since October of 2018, compared to 101.7 in November and beating forecasts of 100.8. Guys, I would add October of 2018. That was 2 months before the Fed started hiking rates in that 2018 hiking cycle. So that's going way back there. I mean, almost 7 years. Or is that 6 years? 6 years in a few months. This is the best reading in a while. It is also the second consecutive month the reading stays above the 51-year average of 98 due to an improved economic outlook following the election. Small business owners feel more certain and hopeful about the economic agenda of the new administration. Expectations for economic growth, lower inflation, and positive business conditions have increased in anticipation of pro-business policies and legislation in the new year. That's according to NFIB chief economist Bill Dunkelberg. Look, the optimism about inflation, at the very least, I'd say that's probably a little misguided. I don't think inflation is really heading much lower here. I mean, today's data was pretty good looking, but 25% tariffs are going to be wildly inflationary. We'll see if that inflation optimism remains. That being said, the prospects of business-friendly legislation and deregulation, I think small business owners are right to be optimistic about those things. So 2 out of 3 isn't bad here. That being said, I mean, this chart, it's hard to argue with, guys. Small business is more optimistic than they've been in a long time here. Let's just zoom out 5 years. You can see big change over the last few years. The line just went absolutely vertical. Also, speaking of the executive branch, Biden to sign executive order boosting construction of AI infrastructure. This one just hit the tape this morning at 7 a.m. President Biden will sign an executive order Tuesday aimed at reducing barriers to construct new data centers and the accompanying energy infrastructure needed to power the development of artificial intelligence. And the key here, guys, I think, is the power needed to develop them. I think that is the single biggest obstacle or biggest threat to this AI bubble, besides math and generally accepted accounting principles anyway. But the power restrictions causing the build out of these data centers to slow, which would be catastrophic for the growth numbers associated with these chip sales. That is now the biggest problem facing this bubble. And I think that's really what they're trying to do here. The executive order directs the Department of Energy and the Department of Defense to select federal sites that can be leased to companies to build gigawatt-scale data centers, while employing the Department of the Interior to identify available lands to build clean energy infrastructure to support the new data centers. The administration also aims to prioritize full and expeditious permitting of these sites and help facilitate the development of transmission lines and interconnection to the grid. So, I mean, it seems like they're going to use federal land. They're going to streamline the permits. I mean, I don't know what the people with the pink hair and the soup on the paintings are going to think about this, but it seems like the government is all of a sudden all about getting new power plants and new transmission lines built after years spent dragging their feet on the permits of pipelines and transmission lines and new power plants. But as soon as it threatens a stock bubble, oh, yeah, executive order, streamline that stuff. Currently, the market for AI infrastructure is deeply constrained, said Navtej Dhillon, Deputy Assistant to the President and Deputy Director of the White House Economic Council. Not only are these investments capital intensive, but power constraints and powering challenges result in long lead times to bring data centers to market. Again, it's those power constraints. I think that's really what they're going after here. If you guys want to read or hear a little bit more about the power constraints, I put out a video late last week about how the AI bubble needs power, about how everybody's saying, oh, we're going to build these new nuclear plants and token lip service to renewables. Not happening. It's going to be natural gas. Check out that video, should you feel so inclined. And also going on this morning, NATO to deploy naval drones in the Baltic Sea after cable damage. I don't know if I would call this an escalation. I would say maybe a slight escalation in response to a bigger escalation in the Baltic Sea here. Leaders from the Baltic Sea region pledged to step up deterrence, and Russia's Shadow Fleet tankers are suspected of sabotage attempts. NATO will deploy a fleet of naval drones to patrol the Baltic Sea, stepping up its response to suspected sabotage attempts of undersea cables linked to Russia's Shadow Fleet. The new security mission, dubbed Baltic Sentry, will also include Navy frigates and military aircraft to boost surveillance, NATO Secretary General Mark Rutte said in Helsinki on Tuesday after a meeting with leaders from countries bordering the Baltic Sea. The move follows a spate of incidents in which oil tankers tied to Russia's so-called Shadow Fleet were suspected of damaging a number of international undersea infrastructure links. What these ships are doing is they're driving around the Baltic Sea with their anchors down, dragging it across the bottom, breaking cables and pipelines. And, these things are not easily repaired. This is incredibly expensive when this damage happens. We'll employ the right military assets in the right places at the right time to deter future destabilizing acts, Rutte told reporters, alongside Finnish President Alexander Stubb and Estonian Prime Minister Kristen Michael. So more naval assets in the Baltic Sea in response to the sabotage of civilian infrastructure. Guys, civilian infrastructure is now fair game in this, we'll call it a shadow war between NATO and Russia that's going on. I think our side started it with the blowing up of the Nord Stream pipeline a few years ago, and now both sides are doing it. Hopefully our leaders get their acts together at some point. Hey, stranger things have happened, right? I just want to say thank you very much to Armando Reyes. Thank you, Armando, for the super chat and supporting the channel. He says, The Simpsons predicted that XRP will take over Bitcoin. Stack silver, people. Well, let's just say the Simpsons have made some pretty good predictions over the years. That being said, I do not think XRP will take over Bitcoin, not by a long shot. Also, what would constitute take over? Market cap exceeding, I don't know, more people adopting. I don't know how you would measure takeover. But all that being said, I do like Bitcoin. I'm not particularly fond of XRP. I don't own any XRP. But I love the shiny. So I will wholeheartedly endorse the latter part of that message. I like the shiny. Thank you very much, Armando, for supporting the channel, sir. Thank you. Steve White says the Toronto Sun reported that the meeting at Mar-a-Lago with Danielle Smith and Kevin O'Leary was cordial and positive regarding Canadian oil and gas supply. That's interesting, Steve. So that the Toronto Sun is reporting that. Now, let's contrast that. We're going to shrink my melon head again here. Contrast what they're saying about the Toronto Sun article with this Javier Blas tweet. After meeting with President Trump in Mar-a-Lago, Alberta Premier Daniel Smith says Canada should prepare for 25% tariffs starting on January 20th on all U.S.-bound products, including on crude oil. So what do we go with? Do we go with the Toronto Sun? Do we go with Javier Blas from Bloomberg? I don't know. I don't know what to make of that, Steve, but thank you for that data point, which flies in the face of that tweet from Danielle Smith. And also, Kevin O'Leary, why was the guy who promoted FTX at the meeting? Why was he even there? I look, guys, when you take millions of dollars to promote a product and you're a billionaire investor or the Shark Tank guy, isn't it incumbent upon you to vet the people you're promoting using your name and your reputation in order to earn money for yourself? Well, assuming that name and reputation is worth anything, then you should really vet the people that you're promoting. I'm pretty sure that's how that's supposed to work. Kevin O'Leary promoted Sam Bankman-Fried and FTX. He made a lot of money doing it, and people who listened lost a lot of money. Some of the biggest YouTubers in finance did the same thing, made a ton of money pumping FTX. Now, anyways, personally, I'm more interested in hearing from the people who didn't take the money from FTX, but it just goes to show you what I know. Be careful who you take money from, guys. I'll tell you, these crypto pumpers, I get emails from these guys all day, every day, trying to get me to pump their shitcoin on you guys. I'm just not doing it. I like Bitcoin. Bitcoin's the only one I like. Why was Kevin O'Leary at that meeting? I liked him right up until FTX. Let me just put it that way. I liked Kevin O'Leary. I was generally in agreement with most things he said. Promoting a multi-billion-dollar scam, though, that's a tough one for me to get past. Thank you very much, Steve Woitis. Appreciate the super chat and support of the channel, sir. And thank you to Wally, who says the MMMRI has reached 400. That is the modified Mannarino market risk indicator, going all the way back to 2022 with that one. It's reached 400. It's way above all other market crashes from the past. Even with all rule changes and all of the moving goalposts that have occurred, this can't be sustainable much longer. Well, the big inputs to the MMRI, the original Mannarino market risk indicator, shout out to my buddy, Mr. Marino. Also, the big inputs, guys, the DXY, the Dixie, the 10-year yield. Those are the two big ones that feed into that. And they have both been on a tear. They've been rising rapidly ever since that September rate cut. And right now, they're poised to continue doing that. You've got a Fed that's still doing quantitative tightening. You've got central banks overseas that are still in the process of divesting their treasury holdings. So all the biggest owners of U.S. treasuries are sellers. The government is still producing a ton of supply of U.S. treasuries by borrowing money. I don't think the Donald is really going to change that behavior. I would love to be wrong about that. I just don't think it's going to happen. And so the problems in the bond market, in my opinion, will persist well into the Trump presidency, which means the MMMRI is probably going to head higher until there is some kind of a liquidity event in the market that causes a panic and causes the Fed to do an about face, and they start doing Zerpenberg again. They start printing and buying U.S. treasuries. So, yeah, I have been watching that. It has been on the run. It has been moving higher lately. Strong dollar and higher yields, not good for market risk, not when you have a debt-dependent society. Thank you very much, Mr. Wally, sir, for supporting the channel. Thank you, Hunt and Cover. Says, tomorrow I take profits. Here's some for you. All right, Hunt and Cover, congratulations on those profits. Just curious, what are you taking profits on? Just curious what that is. But I certainly appreciate the support of the channel. Mr. Cover, thank you, sir, very much for supporting the Melonheads. And Will Yang, what's going on, Will? He says, a new virus spreading in China. Oh, they're early. That's not supposed to happen for another 6 days, Will. You guys, you're premature here. Like, put the virus back in the test tube for a few more days. All right. I'm also hearing about this. There's this hoof and mouth thing going on in Germany now, the possible thing going on with the livestock there. Bird flu has been all the rage for the last couple of months. So I don't know. We got another woohoo bat flu, as my buddy Chris used to call it. I don't know. But they're early, guys. Not until next week are we supposed to see that one. No more 2020s bingo. Again, the second half of the decade. It's supposed to be a good one. Thank you, Will, for supporting the channel, sir. And thank you, everybody, for having your coffee with the Melonheads this morning. Appreciate all the generosity in the super chats. You guys rock, as well as my magnanimous Melonheads on YouTube and Patreon. Thank you guys for everything you guys do to support the channel. Hi, Mom. Hi, Dad. Love you guys. Don't forget that like button and the subscribe button on the way out. And until next time, live small and dream big.